Yeah, we didn't do that.
You just, well, you want to add some more pages.
Well, I didn't.
Make it look like you really earned your money.
Yes.
Hey, we appreciate you guys.
So I talked to the,
So you got one more.
so we asked for the information.
So you've seen a lot of difference since year one.
Yes, definitely.
Thank you very much.
You're welcome.
Yeah.
Yeah, like 3119.
Yeah. He's talking to you. No, then, yeah, that's, I know I talked to the auditors on this. No, that was me asking for additional information, so I explained. So they already gone.
Okay, guys.
Good afternoon and welcome to the Audit Committee meeting of the Dallas Independent School District Board of Trustees. Please stand and join us for a moment of silence and remain standing for the Pledge of Allegiance and a salute to the Texas flag. Thank you. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Honor the Texas flag. I pledge allegiance to thee, Texas, one state, under God, one and indivisible. All right, I'd like to recognize the committee members that are present. Trustee Joyce Foreman, Trustee Edwin Flores, and I am Dustin Marshall, the committee chair. Also present is non-voting member Tony Stevens, and other trustees. I don't believe we have any in attendance. And our superintendent of schools, Dr. Michael Hinojosa, joins us as well. I have no chair remarks, so we can move along to item 4. A, consider and take possible action to approve the minutes of September 20th, 2018. Do I have a motion?
Yeah, they're on this binder.
They were in the binder. Aaron, do you have a backup binder? Joyce doesn't have one. He's got one for you there.
It's on tab 4A. General counsel, who for it?
We have a motion. Do we have a second?
Second.
All right, it has been moved and seconded that we adopt the minutes of September 20th, 2018. Trustees, are there any corrections? All right, if no corrections, trustees, please cast your vote. All those in favor, please cast your votes by raising your right hand.
Motion passes 3-0.
You have just adopted the motion, thereby approving the minutes of September 20th, 2018. On to item B, report on the 2017-2018 E-rate program.
Good afternoon, trustees. As part of CA Local, the district is required to have an external independent third-party audit of the district's compliance with the E-rate program audit this year. It was done by BDO, and they're here for their presentation.
Welcome.
We performed the performance
You need
audit.
to just turn your mic on. It's the little talking face.
How do you do that?
Yep, there you go.
Okay. We completed a performance audit for the E-rate program. The audit was done in accordance with government auditing standards. We had a couple of instances of non-compliance that were reported in our report. The audit itself involves analyzing Code 47 of the CFR, the program rules established by USAC, procurements, and also conducting interviews with select DISD management and the E-rate program staff. In our report, we discuss the history of the E-rate program and the background of the E-rate program. Our objectives are listed in the report: to gain an understanding of your compliance activities, assess the E-rate program and compliance with the key provisions of the E-rate program, and then to communicate our results in a formal report. Our scope and methodology included our planning procedures and fieldwork. The two compliance findings that were identified during the audit. The first one has to or involves the closing of several schools that were merged during the reviewed period. This was something new that had happened this year. We looked at the requirements of what you do with those assets when the schools are being closed. Equipment can be transferred from one closed location to an eligible entity within 3 years of the purchase. The rules require the same funding FRN number that you can transfer between schools that have the same FRN number, if you file a Form 500 that's submitted to USAC. We had identified 539 E-rate assets that were tied to the schools that were being closed during the year. And in our report, we addressed the different statuses of each of those. There was a form that needed to be filed when the assets were transferred, and that's the Form 500. That was not filed during the year. Our recommendations include timely and effective communication across departments related to the different closures, review performed on a regular basis by the departments to make sure the assets being transferred are done and appropriate notice is given, and timely submission of Form 500. The second finding that we had related to some procurement that we tested. We tested 2 of 4 procurement requests. We recalculate the procurement tabulations that are done and as part of the procurement process. There was a mathematical error on the scoring for the vendor that was chosen, requiring which made the points go from 71.65 points to 66.7 points, which had the vendor go to second place just based on the tabulation. So our recommendations include reviewing the scoring every time a calculation is done to verify the scores are calculated correctly, and then also that DISD contact the grantor to discuss the results of the scoring discrepancy and determine any additional considerations related to the vendor chosen. We also issued a separate report just in our wrap-up report of 3 different comments that were not considered compliance findings, but just areas for improvement. I can go over those if you wish, but they were not related to compliance findings, just recommendations.
Great. Any trustees, any questions?
Yes.
Trustee Foreman.
Okay. Since I just got this, there's probably more questions to come. But the first question is, have you done the E-rate audit for the district before?
Yes.
Yes. Well, did you do last year's?
Yes, we did.
I thought that was Weaver. Excuse me?
I believe it's been BDO for the last two
think it was just-
previous years.
Okay,
Or last, yeah.
last 2
think it
years.
was-
Weaver's been doing the comprehensive annual
Okay.
financial report
Okay,
audit.
good, good. Okay, so I think the first finding that you talked about, where we didn't do the Form 500 to transfer the assets, and I see the listing is not in the report. How do I get a copy of the listing of the assets that were not transferred properly?
We provided that to management.
Okay, so how do I get a listing?
I'll have either Jack Klanick or Larry Thron provide that information for you.
Okay, so I need a listing of that, and with that, I'd like to know which schools they were transferred from, since these were closed schools. I'd like to have the schools identified also. And then on the second finding, I'm assuming that you said there was a mathematical error for scoring of a particular vendor. I guess the question would be, how many procurements did you test?
We tested 2
Only
of the
2.
4 procurements that you had during the
There
year.
were 4 during the
4
year?
total,
Okay, and you tested half of them.
yes.
Okay, and I'd also like to know what vendor that was and actually what we were procuring. Because if I understood you correctly, and I might have misunderstood you because I'm still kind of hairy trying to get in here, but you said the scoring went from 67 to 71.65 with a miscalculation?
It was originally 71.65. The rescoring had it fall to 66.7, which had it moved to second place. The highest scoring vendor was 71.04.
And so was the second vendor awarded any contracts
The vendor that we
that you tested?
test,
The one that the scoring was different? Was
they
it awarded?
were not.
Yes.
Oh, they were? Okay.
They were?
They were. You can answer, yeah.
Yeah, help me.
The original vendor that was selected
It moves.
based on the highest scoring, a contract was issued and signed with them in July of 2018.
Okay, all right, I'd like to know what that vendor is also and what the procurement is. And I'm assuming that will come from
That'll come from staff.
staff also. Would you make sure you add the vendor and what kind of business we're doing with that particular vendor? Thank you.
Trustee Flores? So I just have one quick question, and it's mainly for Jack, I think. Is there anything that was recommended as reactions to these two findings that the management team disagrees with or does not intend to follow?
No, sir, we agree with the findings. We do intend to file the Form 100, the Form 500, so we're aware of the assets that were moved. They're sitting in storage, so we know that where they are, of course. But we just don't have another place to deploy them right now, or if they may have been moved to a different site that was on a different funding request. So we are gonna file the Form 500 and make sure we're compliant there. And then, I can't respond on the rescoring of the vendor because that's more of a procurement issue. I don't know if that means that we have to rebid that award. But Trustee Foreman, to your question, and Rusty, correct me if I'm wrong, but I think it was Fortinet was the vendor that was awarded on that contract. Do you remember?
Actually, I think it was InSync that was,
Inside, okay, I better
Yeah, we would
double
need to
check that
verify
one
that.
and bring it back to you.
but I do have that, so I
Okay.
can send it to you.
But I don't know if we have to rebid that, sir.
When you finish, I have another question.
Okay. Yeah, and I see that you've listed the responsible party as Ed Wooten on the second issue since it's in procurement, but this seems just a matter of providing a second set of eyes to review the scoring tabulation sheets, right? Is there any reason why we wouldn't want to do that?
No, we'll actually do that.
Okay. Let's do Trustee Foreman, and then we'll come back to Trustee.
Just because Jack
Flores.
addressed me. Jack, you said, when Dustin asked you about the assets, you said either they were in storage or they might have been transferred somewhere else.
To another location, to another school.
To another location,
Yes,
so
ma'am.
we really don't know yet.
We do know where they are. So we haven't lost the assets. We know that we moved them out of one school and we moved them either into storage or into another school.
Okay.
But I think what the auditors found is that when that happens, we are obligated to file Form 500 and notify USAC, and that's exactly what we're gonna do.
It was based on its E-rate funding.
Yes,
that-
ma'am.
That purchased that equipment. And so that's why that's that way. Yeah, I'd like to know, like to see those 500s.
Sure.
Trustee Flores?
Oh, so I was just looking at this, the management response to the procurement finding, and it says there was a mistake, human error on the supporting documentation. However, award was still made to the vendor providing best value, price, and other factors considered. That's all.
Good. Thank you. Any other comments? Great. Thank you guys for your report.
Thank you very much.
Thank you. All right, item C, report on the 2017-2018 comprehensive annual financial report from Weaver and Tidwell.
Yes, trustees, under the BDB exhibit, the discussion of the annual results of the CAFR audit was completed by Weaver and Tidwell are supposed to be discussed in the meeting.
Welcome.
Good afternoon.
Afternoon.
Appreciate the opportunity to be here. We've issued our report on the CAFR, our report on internal control, and on the single audit. But we've also summarized our some of the financial information findings in this document called Audit Insights, and I'd like to walk through that with you at this time. And then we can go back through and look at any of the details that y'all would want to, y'all considered necessary. First, I'd just like to give you a little bit of overview of the firm and where we're at right now. The firm's always changing, but we're the largest firm headquartered in the state, 7 Texas locations, over 700 employees, 100 plus partners. I think the last time we were here, we were auditing 3 of the top 5 school districts in the state. We're now auditing all 5 of the top 5 school districts in the state, all the 5 largest districts in the state. We're also auditors of over 50 public schools and charters in the state of Texas. Just a little bit about the background. This is the same engagement team or management team you've had for the last several. Yes, we do. I'm sorry. I mean, we had a couple extra copies. Myself and Jennifer Ripka has been on the management team for this engagement for several years. I'm pleased to announce that Jennifer was appointed as partner in the firm back in June, so she's now a partner with us. A little bit about the audit process. On page 7, you'll see the engagement timeline. We had a planning meeting with the Audit Committee on April 25th and went over a lot of the planning information, including walkthroughs of significant transaction cycles of internal control. We performed our interim field work May 14th through June 29th, and final field work August 27th through 26th, leading up to this presentation today. During the audit engagement, we actually meet with management of the district on a weekly basis to update on status of where we are throughout the engagement. Page 8, the audit process. The audit's performed in accordance with generally accepted auditing standards, generally accepted governmental auditing standards, and the Single Audit Act. It includes a review and evaluation of internal control to determine that the internal controls of all significant transaction cycles are operating as designed. It also includes a test of compliance with laws and regulations relating to the federal financial assistance programs, and we give an opinion on the financial statement as well as opinion on compliance with the requirements of the major federal financial assistance programs. On page 9, you have a little overview of the risk, how we assess risk relating to the audit. The major areas of risk that we identified were federal and grant revenues and expenditures, the state foundation school program revenue and related estimates, construction and progress, the purchasing and bidding requirements relating to those, and the capitalization of those assets, payables, accrued liabilities and expenditures. Additional significant audit areas included cash and investment, capital assets, and long-term debt. During the interim field work, we performed walkthroughs of significant transaction cycles. We discussed which areas we were going to perform the walkthroughs in our meeting of April 25th. The major federal financial assistance program that was tested during the current year was the child nutrition cluster, which was, I guess it was appropriate that it was time for that, because I believe some of the audit committee members had questions relating to the food service fund, so it got an in-depth scrubbing this year, and we'll go into that in a little bit later. There was the district received approximately $237 million in federal financial assistance. Of that, $106 million of that was received through the child nutrition cluster. During the course of the engagement, we performed fraud interviews of the management team, looking for inquiring relating to fraud, the way individuals think fraud may occur, and how they would communicate such items if they were to be aware of something like that. We rotate the management team. We interview on a yearly basis, and current year we interviewed approximately 10 employees. We also tested compliance with the Public Funds Investment Act and the state compliance requirements. We did capital projects, construction testing, bid procurement testing. We tested controls over cash disbursements and payroll. We did, during the initial meeting with the Audit Committee, there was some Audit Committee concerns that were identified, and we addressed those during the course of the audit, and we'll follow up on those here in a minute. We also followed up on prior year recommendations to see what the status of those were, in addition to information technology testing. And during the final field work of our tests, we test all significant account balances using a combination of looking at material transactions, sampling, and performing analytic procedures, as well as reviewing the financial statements that the district prepares and tying in the numbers from our audit, and also looking at compliance with the GFOA program for excellence in financial reporting. And with that, I will turn it over to Jennifer to talk, well, not yet.
Jumping ahead.
Yeah, I'm jumping ahead a little bit. We did issue a report on the financial statements, an unmodified opinion on the financial statements. There was an emphasis matter in the report, as the district was required to implement GASB 75. And GASB 75 had a pretty significant impact on the financial statements. GASB 75 relates to other post-employment benefits, and the district now is required to record its liability relating to other post-employment benefits. It relates to the TRS care, and that information is discussed in length in Note M on page 55 of the CAFR, but the impact on beginning net position of the district, which is the government-wide financial statement, it doesn't impact the fund financial statement, was $1.1 billion. So it was a significant liability relating to be recorded. There were change in the benefits that were made during the year, as well as a change in the discount rate. The ending liability at the end of the year was $629 million. We also issued a report on internal control, and we had a significant deficiency we noted. We issued a report on the compliance with the major program compliance requirements. Our opinion was unmodified, and we had no findings related to the major programs. And with that, I'll turn it over to Jennifer to talk about our findings, the significant deficiency, and our other recommendations, and follow up on the Audit Committee's concerns as well as prior year recommendations.
Okay, so we had one significant deficiency, and that significant deficiency relates to the payment authorization for utility expenditures. So on page 156 of the CAFR is the deficiency in length, and then on the next page it includes the corrective action plan that management is going to put into place. But in short, during the fiscal year, there were 18 vendors that were authorized by the district to auto draft payments. Those included utility vendors, so water, gas, and electricity, and those were 10 of the vendors. There were 7 payroll/benefit vendors, and then 1 credit card processing company. The utility items were the only ones that we found to not have a review and reconciliation timely. And so that lended to the significant deficiency, and we discussed in our recommendation that we want management to implement a formal written process outlining the process for reviewing and reconciling utility expenditures, including a specified time frame for which that will occur. So during discussions with management, we noted that because of the way the city of Dallas and the other cities that provide water to the district, because of the way that that information is brought in, which is in paper form, it would not be, they would not be able to do this reconciliation prior to payment occurring. So that's why we included in here a specified time frame, and on the corrective action plan, they have noted the time frame that they are going to be doing that in, but it will not be done prior to payment.
For just the water portion of it. The other ones they receive electronically, and they can go through those and process a little quicker on those items. But not only our recommendation was not only to identify the process and for timely review, but the purpose or reason for further investigation to follow up with the vendor for variations in the billing, so that and a documentation of that follow-up and why they thought it was appropriate to go ahead and pay the invoice even though there may be some variations, or what action was taken if there was a variation that was rectified.
And I want to point out too, in the finding itself in the CAFR, in the effect and potential effect piece, there's a note with regards to internal audit and their part in the process for continuous monitoring of these items. So with that, Aaron's group is providing the continuous monitoring piece, and this note is just stating that internal audit is independent of the departments. They should not be inserted within the control environment. So their continuous monitoring is not a reconciliation or review on behalf of the department themselves.
So they should be looking at controls as opposed to performing.
Yes. Are there any questions about these? I anticipate that my piece will be the one that have all the questions. So any questions?
It's a good delegation.
I do have some questions
Okay.
about that item. Do you want to take questions now or at the end?
Either one.
Whichever way
Yeah.
you feel more comfortable with.
Trustees, any questions? Okay, so I have a question. I mean, this item came before this committee months ago,
Right.
prior to this this audit being conducted, and we were assured by Mr. Lane sitting in the back there that we were revising our process to assess the bill prior to the auto draft occurring.
Yeah. So our review.
Well, my question is, I'm
okay.
assuming that your review happened prior to his change, and since he's now changed it, this is no longer applicable, right?
Yeah. So
I get that
our,
it still needs to be part of your audit.
Right.
But from a operational standpoint, this has been
Yes.
addressed.
Now, we haven't.
So we have not.
You don't know if it's been addressed,
Right,
but
but they
Scott
do.
knows that it's
Yes.
been addressed.
Yeah.
Okay.
Yeah. So our audit is during the course of the fiscal year.
I got it.
Yeah. So, but I can let them
So
speak
quick
to.
question to the administration. Do we feel good that this has been addressed?
Yes.
Okay, thanks.
Okay, so that was the only significant deficiency that we found. We did have other recommendations that are included in the management letter. The first one is in regards to the disposing of assets. So currently, during the fiscal year, DISD utilized the DISD fixed asset transfer and disposal form, but also other forms of documentation could be utilized in replace of that disposal form. But the other documentation that could have been utilized was not outlined within the process documentation. So our recommendation was that staff review the current process and formally document what the process is going to be for disposing of assets outside of the use of that DISD fixed asset transfer and disposal form. So when we looked at these 4 instances that are included in the management letter, we noticed that Excel documentation and email documentation was utilized, and for those of you used Excel before, that can be changed at any time. So it's not a great form of documentation when you're trying to use it as evidence of a disposal, because you can change that at any time going up to when we review it. So that was the first one with regards to capital assets. The second one was we noticed that in the capital asset documentation, the district had included one tag number for one asset, but a different tag was actually placed on the asset itself. We were able to determine that it was the same asset through the VIN number, but we want the district to stress to asset management and district staff that providing or putting the correct tag numbers on the assets is very important from an asset management standpoint. The next item is there are two different ways that salaries can be changed in Oracle. One is through an electronic payroll personnel assignment form, and those are utilized for new hires, promotions, things like that. The other one is uploads into Oracle, and those uploads are typically going to be items that the board has passed en masse, so either some type of across-the-board percentage or the TEI stipends. Those are uploaded into Oracle in Excel or upload form. So with the electronic payroll personnel assignment forms, those are individually reviewed and approved. And then with the uploads, those are reviewed as well, but there was no evidence that we could walk through. There was no formal evidence that we could see that was happening. So we went back to HCM and told them that we would like to see that they're able to show us evidence that that's occurring, who's performing the review, and then also when that review is taking place. Because they were able to show us the upload files and the review of those upload files, but it was in Excel again, and so it was hard to tell when that was taking place and who was reviewing it.
And of course, during the detailed test of payroll, we tested a number of payroll transactions. We noted no items that were not in agreement with what was approved during that process. But in terms of just documentation of the internal control that took place, we'd like to see that being documented.
Right. The next one relates to procurement, and this one is kind of a pushback on the end users. So when an end user is going to procurement and saying we would like to procure XYZ items, they're providing procurement with an amount limit or amount not to exceed limit to be included on that. During the course of our testing, we noticed that the actual expenditures were much less than what the amount was in the amount limit or the amount not to exceed limit. And so we told procurement that we feel that they should put a process in place that states that the end users must include either historical documentation with regards to the amount limit or the amount not to exceed limit, and or a strategic plan which also includes actual documentation of amounts, not just what they're going to be utilizing those items for. Because what we would find is when procurement would push back on the end user, they would say we need more money because of XYZ, but it would have no dollar value attached to it. And at the end of the day, you all are receiving that information, and if you don't know where they're getting that from, then it's hard to say yes, this is a good amount for that contract. And you could run into an issue where if the expenditures were only going to be actually $1 million, but the amount not to exceed is $10 million, items can be slipped in under those procurement. So,
And in a number of cases, these are multi-year contracts too, so there's opportunity for abuse with excessive limits being provided.
And then the last recommendation was related to supporting documentation that was provided by Dallas ISD Construction Services related to construction in progress, did not reconcile to Oracle. So we recommend that Construction Services reconcile their records to Oracle in a timely manner, and that occur prior to the audit. Because what happened in this instance is Accounting Services was able to reconcile it, but they were doing it on their side for the audit instead of the supporting documentation supporting the amounts that are in Oracle. Any questions with regards to those recommendations?
Trustees? Trustee Foreman?
Just a couple of questions.
Yes.
Particularly on the procurement side.
Yes.
And the end user bringing the amount. I question that quite often. The amounts that are
Right.
actually on the request.
Right.
Because a lot of times it's a lot more than it was the previous time.
Right.
So you're and I'm trying to understand what you're asking them to do.
Yeah.
So it'll make sense to me. Is you're asking them to use some kind of historical data. So that, for instance, they have, in the previous 3 years, they spent $1 million and then they come back and want a contract for $3 million.
Right.
So we'll be looking at historical data to verify why that amount makes sense.
So either historical data, or if there is a reason to increase that
Be
amount.
able to validate
The
the
Yes.
strategic plan, what they plan on utilizing, and not just we're gonna buy more, but what it's gonna be, why they need more, and
Yeah.
specifically what are they buying.
I
Yeah,
think
what the
that's-
dollar values are related to that. So if it was because historically the district purchased something 10 years ago, and of course it's not gonna cost the same as then that needs to be laid out for the trustees.
Good. And the second thing is on the, I don't like human capital management. That sounds a little crude to me. So I'll call it human resources, which is a little bit
Right.
better for me. And Dr. Hinojosa, we would love to change that name. I've been complaining about it for 4 years. We'd love to change that name. I've been complaining 4 years. But I guess the big question for me is that, and I don't understand the process, so forgive my ignorance. But is it more than one person uploading salaries?
So the process is that one person is doing the upload, but several people are reviewing the uploads. And IT is assisting in the uploads of that into Oracle. But HCM is coming through and they're reviewing that the information that was uploaded was actually what was intended to be uploaded.
So is it the same person making that review of IT that gave the information to?
No, it's different people.
It's different people, so,
Yeah.
and the reason I asked that question, you got multi-people in this process.
Right.
Where there is, a possibility of human error.
Yeah, and the issue and it's not that it's not done, we saw where there's procedures where it's done, it's just the documentation of what was being done. It's being documented in an Excel format, which is open to manipulation. Yeah.
To change. And so, what was the response from HR?
Do you have the,
Yeah, I think they
you
do.
bring 'em? Essentially their response was that they are going to document it, who is the person that was reviewing and when it was reviewed, and they're gonna do that via email. Because currently what they're doing is they're just walking across the hall and saying, hey, I reviewed this.
Do this.
Yeah, and then, but I'm not there when they
Right.
do that, so.
Right. I have every confidence that they'll try to get it right, but I wanna make sure that it's
Right.
in writing.
Yeah. Oh, no.
That's construction services.
You're missing a page.
No, that's why I'm not seeing it. That's the first one.
Okay, it says management acknowledges the recommendation And beginning in 1819, the compensation department will provide email confirmation that audits performed during the initialization process have been completed. So it's not very detailed, but
It's not, it doesn't really say when they're gonna do it, when it's gonna take place. So, Dr. Hinojosa, it would be good to know exactly when they're going to, actually implement something to,
I'll get,
to take care of that.
Dr. Wilson to further elaborate on that
right.
item.
I believe these.
Cause she probably wasn't
were
involved
these,
in that process.
corrective action plan that were provided to this board.
They were sent separately or received later.
And then the last one is on the construction services
Yes.
side. So you're saying that it was being reconciled on Oracle on the accounting side, but
Yes.
not on the construction management side?
right, so in construction services, their system is different from Oracle. And so their system should be supporting the information that is included in Oracle. But there were differences between their system and what was included in Oracle. And accounting services helped us to get comfortable with the differences by reconciling.
So the differences were monetary.
Yes, yeah.
So they might be thinking they got X dollars, but they're saying over here you don't have all those dollars.
Yeah, so it's in terms of expenditures, but yes.
Yeah, it's expenditures as opposed to money. It's how the
Yeah.
money was spent
Yeah.
and accounted for.
Okay.
And there has been a lot of change in that department.
Yeah.
So what did they say about what they were gonna change? Give it to me so I can read it.
I don't, it was in, I think they've been provided to,
I just got the binder, so,
Okay.
so pointing to the binder, that's something I'm gonna talk about a little later. I like
Okay.
to,
It is there's a letter it's dated October 30th, 18, and it looks like it is the very last item.
and it says,
Page 3. It states that in fiscal year 19, the district will review the records that do not reconcile with Oracle and implement measures to update Oracle accordingly.
so, Scott. How are you?
I'm good, how are you?
So I would assume that means that you're gonna put a plan in place that's going to update, is it quarterly or monthly or?
Yes, ma'am, we'll provide that, and I know I've talked to Tim about this situation, and they were basically running the construction, I wanna say it was on Excel, you know, a separate document entirely, and they are in the process of only utilizing the Oracle, because those are the real numbers. I mean,
Right.
what's in Oracle is what's in the bank.
Right.
So I know they're doing the conversion over to strictly using
Okay.
Oracle.
Okay, all right, thank you.
Trustee Flores. So I just have a couple questions. Scott, real quick before you leave, to build on that same question, can you guys give me an example of something that was a discrepancy between the construction services and the accounting view?
Trying to think exactly what was included in
Like when you say you got comfortable with it, you
Right.
got comfortable that this was a like manual error oversight in Excel?
right.
Or
Yes.
yeah,
yes.
we were
Not that there
identifying
was
what the
anything-
difference were and we're
Yeah.
comfortable with the amounts.
There
we
was
got
nothing
reported.
nefarious
No,
happening in the
no.
construction department
No.
that made you feel like there was
No.
money being misappropriated or
No.
vendors being overpaid or anything that this committee should really be worried
Yes.
about from a dollars and cents perspective.
No.
Simply from a process perspective, we need to
Correct.
make sure the process works going
Yes.
Okay, I
yes.
just wanted to clarify that. One other question on the procurement end user.
Yes.
I share Trustee Foreman's concern about this issue, and I'm wondering if this is a lack of policy within the procurement division that doesn't require having a justification for the amount, or if it's a lack of adherence to an existing policy that we already have, because it seems to me pretty intuitive that when someone submits something to the procurement department, it should say not only how much money they want, but how they arrived at the amount of money that they want.
Yeah, so I think that I think it's an end user issue.
Yeah, I think it's a lack of, I don't
Yeah.
think that process is
Well,
documented within the system.
yeah, so I think currently it's just like you, it's a kind of a common sense,
Sure.
right, I think it's harder for procurement to push back on it if they don't have it written, but then also on the end user side, they, if they don't have to, then they're not going to.
But whatever communication device, whether it's a form or a system that's filled out by the end user and submitted to procurement, that form or that system needs to prompt for, justify your expense
Right,
number here,
Yes.
like write it in, fill it out,
Right.
whatever. So are we doing that and people are just skipping that, or?
Yeah, I don't think that it's required, it doesn't
It's
appear that it's
suggested, but
required,
not,
yes.
but it's optional.
Yes.
Okay,
Yeah.
well,
And I think sometimes people are, they're throwing a number out there, but they just don't.
yeah, so I guess I would just suggest to the administration that needs to be a requirement. I mean, and it seems kind of, standard in any procurement process that we would require the justification of those funds rather than letting people round up by $50,000 or $100,000. So, not really a question, but I just
Yeah,
want to make sure
and-
we're clear of it. That's an important issue. That's the most important thing in this.
I can
document.
address all the contracts, but I can kind of address ours because our original to budget approval was well in excess of what the district negotiated our audit fee to be. So there was a substantial difference, and that may have happened where they go to the board with
With accountants
an
and
amount,
attorneys,
and
that
then they
makes
come
sense to me,
back.
because y'all tend to overbill and, come up with extra hours along the way, but.
I don't know about that.
I'm just kidding. Any other questions so far on this section? All right.
No, so I was just gonna chime in.
Okay, feel free.
I mean, it just seems to me relatively straightforward that, you don't get the approval if you don't have the paperwork. I mean, it just, people in my office try to bypass the docketing system, and I'm like, the docketing person says, no, you have to show me where the client said to do this, and only after I have the email or the piece of paper or something to document, then will I go and, say, yes, you could move forward. Just a comment. Thank you.
Great, thanks.
Okay. And then the next section is in regards to the audit committee concerns.
When we were at our initial planning meeting, we requested items that questions that the audit committee might like us to dig in a little deeper into during the course of the audit, and there were 4 or 5 items that were identified, and we certainly did that during the course of the audit, and this is the response to those questions.
So the very first item is awards to vendors between $50 and $149,999. And so when we did the testing with regards to this is one of the sections that we saw where, for instance, there was one contract that was awarded for, or the amount not to exceed was $149,999. The actual contract was for $18,000 subscription, so an annual subscription, and it was a 3-year contract. So that would never get to $149,000, and so that was one of several instances that we noted in which the expenditures tested was much less than what the amount not to exceed was going to be. So that kind of goes back to that item.
I think the original question, the concern at that committee level was the fact of split purchasing to get, and we really didn't see that. We see purchase contracts being expanded instead of cutting off and making them more. We see where, like we said, there's no limit amount, or the limit may be more than what's going to be purchased. But we didn't really see where they were splitting purchase orders to try to fall under that limit.
The next item was food service expenditures, because child nutrition was the single audit for this fiscal year. We tested a random sample of 60 cash disbursements and 60 payroll disbursements. And during that review, we not only look for compliance over those cash disbursements, but also the controls over those disbursements, as well as if it's a proper expenditure during the fiscal year. We also do procurement and bid testing specific to child nutrition. So that was done during the course of the fiscal year as well. Budget amendment, do you want to?
Yeah, well, and through that, we did not find any
You're right.
issues relating to the purchasing and the food service fund. And we'll get into the financial aspect of the food service fund a little later on. But in terms of compliance with the contracts, again, we not only test for compliance with the district system, but compliance with the controls relating to this, the Single Audit Act or the Child Nutrition Program. And we did not find any issues in any of that testing.
The next item was budget amendments. The board amended the general fund operating budget on a monthly basis. Those amendments fell into 18 categories, and those 18 categories are listed on, it says page 13, but it's page 12 of the CAFR. So each one of those categories are listed in the MD&A. And the process for budget amendment request includes the budget chief submitting their amendments to the CFO and or the budget services department for review. That occurs monthly. Discussions between the parties submitting that amendment and the CFO and the budget services take place, and then once a consensus is reached, that's when the amendment is brought to the trustees. And during the course of our testing, we noted that all budget amendments were appropriately authorized by the Board of Trustees. The next item was the payment authorization. For that item, you can refer back to the significant deficiency and internal controls that I spoke about earlier.
That was about the automatic pay was the
Right.
question they had, and we addressed those.
Yeah. Any questions on those items? Yes.
Trustee Foreman?
Okay, my question is on the 52-149-990.
Yes.
So while I note that you said you looked at split purchasing to see if anything was split purchasing, my concern has constantly been the 149, 910, 990, right under the threshold.
Right.
So did you look at that?
Yes, and so we utilize a data extraction software called ACL so that we can pull down to those items, and then we review those items for proper expenditures. And so we didn't find any that were split.
No, I'm not talking about split.
Okay.
Well, yeah,
Okay, the
well,
authority is
numbers-
up to 150,000.
Right.
So what I was referring to is those falling just below the threshold.
Right.
There wasn't a substantial amount of those.
No. Yeah. But we did review those, and we noted no improper expenditures.
And some of
related.
that, I think in the investigation, some of that concern had maybe came up previously, and they may have addressed that during the current year. There was not a whole lot of, we didn't see a whole lot of purchase orders that were right below the limit.
All right. So I'll be asking for a copy of those. Okay.
I don't think we have any further
Any
questions.
answers? Okay.
Yep.
All right. The next section is the follow-up on prior year items. So, previous year, we went through the same process where we had recommendations. The first one was instances of sample planned items disposed of during the fiscal year that had no associated book value. So we recommended that district staff go through and inventory property that's owned by the district. That took place, and they were able to discover some land and buildings that were not included on the asset listing, and those were placed on the listing during the fiscal year. The next one related to identified 18 playgrounds purchased within the deferred maintenance fund, which is an internal service fund. And that one, those items were not capitalized. We had previously noted that the deferred maintenance fund, among some of the other internal service funds, were not those funds were not acting in an internal service manner, and so the district has to close that fund and during the fiscal year based on our recommendation. The next one is our ITAS department performs procedures with regards to IT controls, and they noted that the district's ITS backup plan and other IT policies are not updated and reviewed annually. That there are policies in place, but they were not updated and reviewed. That is still the same. There's still no formal process that's in place with regards to those items. The next one was 19 out of 34 enabled dormant accounts with privileged access were found by our ITAS department. Now the number of accounts decreased down to 4 out of 11 active dormant accounts with privileged access, but it's not 0. The next one is we recommended that the district review the current fund balance policy and better define the fund balance goals of the district. That did take place. The fund balance policy was revised, and it was issued on February 9th, 2018. And now the fund balance policy does read with the formula for determining the minimum fund balance. So that is defined in the policy itself. The next one related to the risk management fund and the rates that are charged to the general fund with regards to risk management. Those items, sorry, me trying to multitask here. Okay, is that right?
22.
The revenues continue to exceed expenses, which had created a buildup in net position with regards to the risk management fund. And so we suggested that the district staff review that fund and the charges that were being charged to the general fund. Based off of that evaluation, $10 million of excess fund balance was transferred to the general fund. But we do ask that district staff continue to monitor those charges, and because as of the current year, revenue exceeded expenditures by $4.3 million, and so if that continues to happen, then fund balance will continue to grow.
Yeah, again, this is a risk fund, so there could be something that happens, anomaly that creates an excessive amount of expenditures. But the nature of the internal service fund is that, you know, expenditures or the revenue is offset by expenditures. It's basically a cost reimbursement, and there's obviously some fund balance needed for something that happens. But the history has been and that's why our recommendation prior to this year was 4 or 5 years where revenues had exceeded expenditures by $4 to $5 million, and it's continuing to happen even after the transfer. Even though it may provide money to transfer back to the general fund at a point in time, that's really not the way that fund should be operating. It should be more closely aligned with the cost of running the risk management fund.
And then piggybacking off of that, the other internal service funds, program evaluation, deferred maintenance, technology services, those funds do not appear to be operating as internal service funds, and those were each closed during the fiscal year. Closing those funds returned approximately $20 million into the general fund's fund balance, and so that goes into the unassigned fund balance.
Yeah, and when you said closed, they were closed effective as the beginning of the year, so there's
Yeah.
no activity in those funds, and whatever fund balance was there went into the general fund. And those two funds that were closed, plus the 10 million that was in the risk management fund, provided about $29 million more for expenditure in the general fund. Is that it?
That is it for me.
Okay. I've got, y'all have any
Yes.
questions about?
I have a question.
Yeah.
On the property one, on
Yes.
land and building, what was the dollar amount that was discovered in fiscal year 18, and how did they what process was used to discover it?
So I'll have to go back and look, but I think the land and buildings were about $1 million. You can go out to the appraisal district and review for land and buildings that are owned by the district, and so they were able to determine that based off of that and checking it against what the asset listing included.
Yeah, I think the total amount, because also those playgrounds wasn't reported. The
Yes,
total amount was $2.something million that got reported that wasn't.
Yeah, but the playgrounds, yes, was separate from that yeah.
Trustees, any other questions? Jack, I saw you shaking your head on slide 21, so you want to spend 2 minutes giving your take on the two items on slide 21 before we move on?
Yes, sir. I just, I do take exception to the lack of SOPs, so I don't know exactly which SOPs you all were looking at, but we've been, due to the other Weaver operational assessment, I think that took place about a year ago, we've been updating our SOPs nonstop. I mean, we have dozens and dozens of SOPs that have been updated in that period of time, so I don't know if it was just a communication breakdown, those weren't provided, or you were looking for something specific that wasn't there, but I think we've made a lot of progress on our policies and procedures.
So I can't speak to that piece in particular just because I don't work in the ITEST department, but we'll send something out. I'll get with that group and then we can send something out to the trustees to clear
Yeah, if there was
that.
something specific you didn't see, let us know, but if it was just that we weren't looking at the right thing or we didn't have an opportunity to send you the right direction, then just clear that up.
And the four accounts, is that something we've?
I'm not aware, I didn't
So
have
you're
a
just
chance
learning that.
to see these findings, so I'm
Yeah.
not sure which 4 accounts we're talking about.
Okay. But we do have a process in place to make sure that dormant accounts with security access
We do, yeah,
are.
we do go through and close.
Yeah, okay, great. Thanks.
Any other questions about that section of our report? Okay, let's go into just some of the financial statement information at a very, very high level. For the current year, for the general fund, fiscal year 2018 revenues totaled $1.4 billion, which is an increase of $29.4 million or 2%. It represented local revenue increased 97.3%, primarily due to sales tax and the E-rate revenue. As expected, state revenue decreased to $84.5 million, and federal revenue increased $16.6 million due to the increase in shares revenue. On page 26, you'll see an overview of the major sources of revenues, local, state, and federal, over a 5-year trend. As you see, the local revenue continues to increase with state revenue dropping. Federal revenue has been pretty consistent over the years. On page 27, you see a graph of the comparison of general fund expenditures and how they were expended. In fiscal year 2018, there was $1.4 billion in expenditures, a decrease of $63 million or 4% compared to 2017. Some of the areas where the more significant decreases occurred in student support, food service, and co-curricular, decreased by $21.3 million. Facilities maintenance, security, and data processing decreased by $13.7 million due to decreased contracted maintenance, about $4.3 million. Electricity, by the way, went down $6.6 million, which was one of the items that was not being reviewed through the process prior to payment, but there was a decrease in electricity by 6.6 million. And contractors and IT was 4 million. Facilities acquisition and construction or capital outlay in the general fund decreased by 31 million. And on the page 29, you'll see a comparison over the 5 years period with how those expenditures have increased over a period of time. Page 30 is an overview of the general fund balance. General fund balance totaled $372 million during the year, is an increase of $112.3 million as a result of revenues exceeding expenditures by $68.7 million. Transfers from other funds of $29.8 million. Those transfers were the ones we were talking about with the internal service funds, excess funds, and the closing down of 2 internal service funds. And also the proceeds from sale of assets of $21.1 million. Unassigned fund balance increased 117 to 251 million, which was approximately 18% of current year general fund expenditures. Assigned fund balance decreased by 7.167, and that's the planned transfer into the debt service fund to cover those notes over there. Each year there'll be a transfer over there to cover some of those costs. The general fund budget highlights general fund revenues exceeded budget by 33.2 million. Expenditures were less than budget by 75.8 million, which is about approximately 5%. Actual transfers exceeded budgeted transfers by 10 million, so it resulted in a general fund favorable budget variance of about $119 million. One of the things, the areas that were of expenditures that were the most under budget, instruction was under budget by 22.8 million. Transportation was under budget by 15.1, and facilities were under budget by 3.1. One of the things that we mentioned in our recommendation was the proposal of budget amendments. While those categories for budget amendments, if you look at all, whatever, there were 13 of them, 18 of them, you did not see any budget amendments coming forward with decrease in expenditures. And looking at the budget, there were several areas that probably could have been identified for increased expenditures. The transportation budget was under budget by 27% at the end of the year, and the facilities and acquisition was under budget by 10%. So, there could be an opportunity to see that there were going to be less expenditures expended in certain areas in the budget being decreased for those items. The debt service fund revenues exceeded expenditures by 12.6 million. Actual revenues exceeded budget by 6 million. Fund balance increased 19.8 million, and part of that was related to the 7.2 transfer from qualified school construction funds. There is in the debt service fund 110 million that's assigned, which was money that's been transferred for the general fund to pay off certain debt, and then the $124.9 million, which is reserved, legally restricted based upon collection of debt service tax. The district did defease $37 million of debt during the current year. One of the defeasance occurred in late April, which was a $2 million defeasance, and the debt service was over budget by $1.8 million, primarily I think related to that defeasance that occurred toward the end of the year. Capital projects funds. Expenditures exceeded revenues by 196.9 million. That's where you're spending off your bonds that have been issued. There were no bonds issued during the current year. Capital projects had an ending fund balance of $497 million. The non-major funds include federal, state, and local special revenue funds. predominantly where the federal expenditures are recorded. There's $236.8 million of federal expenditures in the non-major funds. The most significant, obviously, of the non-major funds is the food service program, and it had an ending fund balance of $21.5 million. The revenues of the food service program were $114.4 million, which were $6.3 million below budget. So revenues did not meet estimated amount, but expenditures were less than budget expenditures by $7.5 million, resulting in a $1.2 million favorable variance in the budget, and that also was the increase as in the food service fund balance. Internal service fund, we talked really a lot about that. Mostly the risk management fund had excess revenues over expenditures of 4.3. It transferred $10 million out during the year, and the deferred maintenance and the technology fund were closed out during the year. Capital assets, total capital assets increased to $123.2 million, relating to primarily spending money out of the capital projects fund. There also was the transfer of buses from Dallas County Schools. It was $41.5 million that was recognized in the financial statements. Those were valued based upon fair value, utilizing the yellow school book appraisal values. That $41.5 million is at the government-wide only, and it's reported as a special item in the statement of activities, and of course those buses are recorded as assets of the district. The district didn't issue debt during 2018. Bonds and notes payable decreased to $108.6 million. The net pension liability decreased by $88.6 million. And of course, with the implementation of GASB 75, the district recognized other post-employment benefits for the first time, which is TRS Care. The ending liability for TRS Care was $629 million. And I know I went through those quickly, but we've been here for a while, so I'll leave it up to y'all to ask any questions you may.
Trustees, any questions? Is that a yes? I'm sorry.
Yes, I have one.
All right, Trustee Foreman.
And it was on the fund balance.
Yes, general fund balance?
On the general fund balance that went up.
Yep.
And that was based on curtailing expenditures.
Well, several things. There's basically three things that happened. One, actual revenues exceeded expenditures, and then you also had $29.8 million that were transferred into the fund, but there was an increase. Revenues exceeded expenditures by $68.7 million during the year, and you had $29.8 million of transfers from other funds, internal service funds, 2 of them that closed, and $10 million from the risk management fund. And there was additionally a sale of assets for $21.1 million. So the 68.7, 29.8 was 21.1 million is the increase of 112.3 million in the general fund.
All right, thank you.
Any other questions? Great. Thank you for your
Thank you.
work and for your presentation. All right, moving on to item D, consider and take possible action to review and recommend to the full Board of Trustees approval of the comprehensive annual financial report for the fiscal year ended June 30th, 2018. Do I have a motion?
So moved.
All right, it has been moved and seconded that we review and recommend to the full Board of Trustees approval of the comprehensive annual financial report for the fiscal year ended June 30th, 2018. Is there any discussion? All right, all those in favor, please cast your votes by raising your right hand.
Motion passes 3-0.
You have just adopted the motion, thereby approving that we review and recommend to the full Board of Trustees approval of the comprehensive annual financial report for the fiscal year ended June 30th, 2018. On to item E, report of continuous monitoring activities.
Yes, trustees, as you know, the Internal Audit Office performs continuous monitoring over several of the district's operations. So today we have 3 reports on utility billing, the disaster recovery program, and the 2015 bond program. The first one that we're going to review is over utility bills. As you know, we run analytics, identify anomalies that are 2 standard deviations out, and then we bring these to energy management and also to accounting services to help us update on the district's implementation of their corrective action plan to address the issues that are identified originally. The one issue that we saw that was an anomaly that we would like to bring to the attention is that in June of 2018, so the final quarter of the previous fiscal year, we saw that Seagoville High School, that usually had an average of about $7,500 per month water bill, all of a sudden had a $256,000 plus water bill. It appears, compared to when we were first doing the reviews in the utility bills, this appears to be addressed quite swiftly, as in it was identified as a major water leak, and in addition to that, there was a refund that was given back to the district in amount of $144,000 plus a few extra dollars. I believe Scott wanted to provide a little further update on the actual current progress of the corrective action plan. So I think it's best that he goes ahead and gives you the update so I don't misconstrue anything.
Yeah, I just wanted to reiterate, we have addressed this issue. We put a new software program in place. However, it wasn't in place when this occurred back in June. So new software, and I've actually got new people that are kind of running that portion of the department. So we feel confident we've got this addressed.
Why is the refund half of the total amount?
Pardon me?
Why is the $144,000 refund so much less than the $256,000 that's billed?
Because there was also a major water leak on top of the overbilling. That's what was,
Which was our
explained to us, yes. I believe so.
Okay.
Yeah, there was actually that usage, so it was an accurate bill. We used that much water because of the water leak. But the city works with us on those situations and doesn't just say, you're gonna pay for it even though you had a water leak.
So they assumed some responsibility,
Yeah.
but not full of responsibility. Okay. It's a big leak. All right, thanks.
Thank you. Also, in addition to this, County Services has identified some mapping issues in the Oracle system that was hurting the billing process. So they're actually addressing those too. So things like schools combining together or schools being renamed would require them to change the organization number. They identified this was causing a problem, and they've addressed that as well. So with Scott's update on his progress and with the update we're seeing from Weaver, I believe that the issue is really being adequately addressed by administration currently. Much better progress than we had seen before.
Great.
Yes.
Do you have any questions now or at the end of all the
Right now.
reports?
No, right now.
Now,
Yeah.
okay.
Great.
I'm old, I'll forget.
Trustee.
So, you said that, talking about the schools being renamed,
Yes, ma'am.
that there were some concerns about what process?
When they were renamed, the organization number actually changed, and the billings were going to the billings were going to the old organization number and not to the new one. So it was a mapping issue in the Oracle system, and they've addressed that.
Okay, all right, I didn't quite understand that, thank you.
All right. Any other questions on that? No? Okay. The next report is on the disaster recovery plan progress. There are 3 points to address here. The first one is that IT has established a secondary internet route. They have purchased the route over at the Stemmons Freeway. We currently have one at Bryan Street, so if one goes down, the service will continue through the secondary one. The next point is that since the acquisition of the Samuel building, IT has been working to prepare the location to house the secondary network core and will include the data and communication systems. Currently, everything's housed at the Buckner location. Now there will be 2 locations to help with the disaster recovery plan. And finally, it appears that IT has identified the full plan, and what they're doing right now is they're developing the new IT disaster recovery plan. They're documenting it, and it's going to reflect the new infrastructure design as well. So it's well underway and being addressed. Are there any questions on this report? The next report is on the 2015 bond programmatic audit. What we do here is we continuously audit the 2015 bond program just to keep the audit committee up to date on the progress and show that we are looking into the internal controls. If you'll remember from the previous internal audit committee that we had, there was an issue that was identified in the process for monitoring or recalculating the invoices that came in. We had one invoice in a PO that came from the vendor, and it was for it was calculated incorrectly for a larger amount than what was due, and because of this, we went ahead this time to make sure that the controls and the corrective action plan that construction services said they were going to implement was in place. What we did this time was we looked at 20 purchase orders, which equal to 83 different payments. We reviewed all of them for adequacy, for compliance, and we recalculated them all, and there was no exceptions found with any of those payments. Are there any questions on that?
Nope,
That
thank
is
you.
the final report.
Great, appreciate it. Item F, report on internal audit findings and recommendations, including resolutions and district actions.
This section of the binder reviews the previous reports that had been presented to the audit committee and the outstanding findings and the progress of the administration in implementing the corrective action plans that they've stated that they would go forward with. And there are color codings here. So on the first page, what we see with the campus controls audit over North Dallas High School, they had 2 outstanding issues, and they have adequately addressed this. We go back, we review what they said they were going to do, we test it, and it looks like they've adequately addressed the risks that were identified there for that first page. Also on this first page there is the clear row, and what that is just saying that that issue has not come up for us to review yet. It looks like that one there will actually come up December, so the next audit committee will go ahead and discuss that one. The next page has just the clear rows as well. On the third page we have the other color coding that you'll see. It is in yellow, and this issue right here in particular has to do with the budget process review. What we had identified was a recommendation was that the district achievement plan, action plans and the campus action plans are actually joined with the district budget, so that the budgets kind of flow with the action plans of the campuses and the districts. And administration had agreed with this, and what they have done so far is they have developed a process, they have actually implemented the process, but they have requested that we wait throughout the school year so that they can see that the implementation is working as exactly they intended. We agree with that extension that they've requested and feel it's appropriate. Are there any questions on that? Yes.
So what's the timing on the revisiting of this?
It will be September 30th, 2019. So after this school year is over, we'll review it the beginning of next year.
So it'll be on the audit plan for me.
Oh, well, it will remain on this findings,
one,
on this report, and then we will report back as to the implementation. The other issues with budget process review were adequately addressed. 2 more pages back, we have the budget maintenance program. The first 2 issues are being asked for an extension, mainly because the corrective action plan, they've been initiated. However, there was unforeseen delays with workloads, and they've requested that they can extend the full implementation of their development of the policies and procedures for the building maintenance program, and also development of the preventive maintenance program, potential decrease in maintenance. They've asked for extensions on these just so they can have enough time. They've asked for, it looks like, December 31st, 2019. Are there any questions on that?
I'm curious what your perspective is on delaying the implementation date by a year and a half. I mean, that seems pretty substantial.
These are really brought to the audit committee for them to review, and if you would like further explanation, it's best for that department to come and explain their request for the extension. I'd hate to,
Scott, you need Chris to get back to us on that, or?
Yeah.
Okay, that's fine.
Let me check.
Just have him,
Yeah.
have him email us.
the final one here, the reason for that delay is just internal audit had asked for additional information, so the extension is on us. We wanted additional information to make sure that the issue is being adequately addressed.
Okay.
The next page there, an issue, an extension request for the MWBE audit. We had an issue between what was found in the MWBE system and then what was being reported to the trustees in the quarterly reports. It's our understanding that the corrections have been made. They've been implemented. The MWBE director has just asked for us to wait for the April report to ensure that it's working as she's intended.
April report?
They said she had requested that she wanted to wait for the first report in April to show that it was completed.
Why does it have a deadline of October?
That's because initially, I'm sorry, I forgot to explain that. That's because initially it was October, and then she came back to us, it was last week, after this had been sent to you.
So this needs to be changed
Yeah,
to 4/2019.
we will update this, yes.
And you don't have any problem with that?
No, I believe that's adequate because actually she's made the corrections as she said she would. She just really wants to make sure that they're doing what she intends them to do.
I have a question.
Trustee Corr?
What, are you saying that the numbers that are being reported to the board were not correct?
The issue was that the numbers were off slightly. They weren't agreeing. They were still within their requirements. That's what we had reported, the last audit committee, that they still met the standards that they were supposed to meet. However, the reporting was just off
I
a
think
little bit.
Trustee Foreman missed that.
I didn't come to that meeting, so, now they report to the board based on payments,
Yes, ma'am.
on quarterly payments. So those numbers were off
Yeah, their tracking system was a little.
based on the payments.
Yeah, I believe so. Let me get 100% back with you on that.
4-page summary of their findings in the last report.
Okay,
Can you just send her the?
Yes.
I didn't get that.
Oh,
There's a lot I don't get. I wonder why.
It was in the board. It was in the board binder that was sent home last time.
Yes.
Just send her another copy of it.
Yes, we will do that.
No, I didn't get the board binder until today. So would you send me a copy of that? Because I want to understand. I do understand that they were reporting to the board based on payments made to the vendor, and that was the percentage
Yes, ma'am.
that they were reporting. And I want to understand where the difference is in the numbers that they were reporting.
Let me get the report in front of you and we
Okay.
can discuss that. Are there any other questions? This was the last item that was requesting an extension in the findings area.
Great.
I don't have a question, but I have a comment maybe that might be useful. In each of the recommendations, could you maybe put the risk level for each recommendation, or have you already talked about that because you're?
We had actually discussed that before. It was actually
Okay.
causing confusion because it was a second set of colors. I can put the risk, I'll put the risk level in a different way, is what I'll
Like a
do.
column with.
Yeah,
I think that would be
non-colored.
helpful, especially when you try to decide, well, is this too long of an extension?
Yeah.
If it's something that's a low risk, then it's not a big deal, but.
We'll put that back in and I'll make sure that it doesn't cause confusion, so, thank you.
Great, thank you. All right, item G, consider and take possible action to accept and make final the internal audit reports. Do I have a motion?
So moved.
All right, it's been moved and seconded that we accept and make final internal audit reports. Trustees, is there any further discussion? All right, all those in favor, please cast your votes by raising your right hand.
Motion passes 3-0.
You have just adopted the motion, thereby approving that we accept and make final internal audit reports. All right, item H, report on progress of the 2018-2019 audit plan.
The final section here, the audit plan progress, is just an update that we provide at every audit committee meeting stating how far along we are in the achievement of the plan. You see there on the right side, it says if it's completed. Ongoing means usually that they're quarterly reporting to the audit committee. Planning workfield phase means we're very close to the end. I don't see any problems with us meeting this plan. Are there any questions on that?
Trustees, committee members, any questions? All right, great, thank you. I don't believe we have a closed session for today for anything, do we? All right, great. Well, in that case, the time is 5:34, and this meeting is adjourned.